Today, I'd like to go through what marginal tax rates are and exactly how we're being taxed in Australia. Unfortunately, taxes aren't being taught at school, so a lot of taxpayers and business owners don't know exactly how taxes are being calculated. Now, marginal tax rate doesn't necessarily mean that you're paying one flat tax rate for your income level. What it does mean is that your income is broken down into layers, and each layer has got its own separate tax rate applicable to that layer of income. Each year you receive a one tax-free threshold, which is for 2026 financial year $18,200. That's why it's very important that when you're applying a job, or if you have many or multiple employers, you have to take just one tax-free threshold box. Otherwise, you will be under tax. Now, $0 to $18,200 is 100% tax-free for all individual residents in Australia. Now, the next layer of income is between $18,200 to $45,000. This level of income is taxed at 16% for the 2026 financial year, plus the Medicare levy. Then the next layer is the $45,000 to $135,000. This layer of income is taxed at 30% plus the Medicare levy. Income between $135,000 to $190,000 is taxed at 37% plus the Medicare levy. And finally, all income in excess of $190,000 are taxed at 45 cents per dollar on 45% plus the Medicare levy. So next time you hear someone say, I'm earning all this income and I'm paying taxes at 45% or 47%, that's not correct. Instead, earnings in excess of $190,000 are taxed at the 45% tax rate plus the Medicare levy. And all the income below the $190,000 are broken down into layers and taxed with a different tax rate. Understanding your marginal tax rate is very important because it helps you with decision making. It helps you in deciding which salary level you want to earn, and especially if you're running a business through a different entity, it helps you with tax planning and deciding which salary to pay yourself this year and what to defer next year.